So, hello. How's everybody doing? So, I hope everybody's having an awesome weekend. This is 50 pips, rocking and rolling here on the 3rd of May, 2015. Had to think about that. So, again, hope everybody's having an awesome weekend wherever you may be, whatever you may be doing. Not making any trade calls or recommendations because everybody's responsible for their own stuff, their own trades. We're here providing some educational material. We're looking at some technical analysis, again, for educational purposes only. And the fact that you're listening to this means you've read, you understand, you accept all the disclosures, disclaimers on the blog and everywhere else in the whole wide world. So what's going on, guys? We've got an awesome little week shaping up, so should be interesting, right? Fairly consistent data flow throughout the whole week. Monday being a bit lighter on terms of the data counter. We do have some Australian data, and then we have the China PMIs coming out. We got all the PMIs out of Europe on Monday. Then Tuesday starts to, we start to get the bigger stuff. We got that rate decision out of Australia. It's going to be very, very interesting. We've seen a lot of wheeling and dealing ahead of that with a lot of talk that it's pretty much a done deal, that it's going to be cut. I'm very cautious and skeptical whenever everybody says anything is a done deal, so we'll have to see what happens there. We got a bunch of European data with unemployment. We've got trade balance out of Canada, out of the US. We got those PMIs out of the US, and then we have another dairy index, basic dairy auction out of New Zealand. So that tends to be a mover. That's only Tuesday. Then we go into Wednesday. We got again more data out of New Zealand and Australia. We've got all the PMIs coming out. We've got Yellen speaking. So again, another busy day. Thursday, we've got unemployment out of Australia. We've got, elections in the UK. So, May 7th, big day in the UK. We got more data with unemployment claims and building permits out of Canada. And that takes us into Friday when we got RBA on the wires again. We got a trade balance out of China. And we've got all that unemployment and out of Canada, non-farm payrolls out of the US. So again, very, very busy week, across the board. The whole week is going to be fairly interesting. We've got a lot of event risk. And don't forget, all the wheeling and dealing out of Greece. So where does that leave us for the charts? What are we going to look at this week? This week, we're just going to focus on what I think are going to be the most interesting things, just to quickly look at some of the futures contracts. I mean, there's no big change in terms of the equities. We've been talking about that for a long time. And, we've been talking about tactically looking for opportunities to trade the short side, looking like both, in terms of NASDAQ and ES, they're having a bit of trouble trying to attract new sellers at highs. And that even though, globally speaking, path of least resistance probably remains higher, it looks like we're trying to take advantage of grind higher, looking for some tactical reversion. And we got some fairly decent sell-offs last week. So again, that was fairly interesting, but really nothing much to write home about there. What's happening on crude? So I just wanted to update. It's been a bit since we talked about this because, we had a bit of a longer term view here, and our outlook was basically that this was going to base inside 45-55 range. As we said, we're not getting excited because these basing processes, as we said from the beginning, right, as we started to enter this late last year, it can take months, if not quarters, to base properly and then try and break out. And, so far so good, right? It's playing out fairly nicely. We saw this consolidation or this choppy action here, but pretty much a fairly steady grind higher, trying to take out the upside. And what we said, heads up on this 55.45 sustained break, we expect to see some kind of aggressive action. And what we would expect to see would see this pop back into the 59s, which should be protected. And then what we said, ideally, if this is a move that has legs, we'll see some kind of a retracement with these 59s being defended on the first touch, and then bam, the buyers coming in to press it all the way back into the 63s, in terms of a much bigger long, couple of months, quarters down the line, probably to see this hopefully look to stabilize around the 60-70 mark. So far, you see we got the aggressive defense of this level well ahead, came down, aggressive defense of previous resistance, now acting as support, and now it's trying to break higher. So again, watch this line going into the week. Daily closes above these 59.30s as 59s would expect to hold a bid tone for a move back into the 63s. Again, if it can't manage to hold on daily closes above the 59s, then we could see some weakness, maybe possible moves back into the 55s. But this is going to be pretty much the pivotal zone going into the week. And again, gold in line with equities, is a bit of a wait and see here. We're hovering, we've discussed, we expect to see a lot of choppy and very aggressive moves around this 1200 mark. We think, broadly speaking, it doesn't mean an awful lot. We think we're still inside that 1250, 1200, 1150 range, and we'd expect a lot of wheeling and dealing, and that means even possible aggressive moves to the upside, aggressive moves to the downside. But unless we get sustained breaks below the 1150, unless we get sustained breaks above the 1250, we expect, broadly speaking, to be chopping around in range. Again, the only thing, you tend to see the way this is working is, when equities catch a bid, this is selling off, and when equities are selling off, it tends to catch a bid. The only thing I'd be cautious on, I'd watch out. Be careful if you see, if you see gold catching a bid, despite no matter what's happening on the equity side, then you might want to, you might be a bit cautious, see what happens. But nothing. Nothing too drastic there, pretty much in line. We talked about Aussie, and again, the whole outlook here is similar to crude in the sense that we're looking for this to base inside this broader 80 and 76.20s. And what we said, it looked like this was the key, right? So we said, as long as we can't get daily closes below these lows, we'd expect the fact that it can't attract any new sellers at low to mark a bottom here, and we'd expect to see a move back into the 80. Right? And what we said is don't get too excited if you get back to the 80 because the whole trend is down. This is still a chop range. So again, a lot of wheeling and dealing. We never got that close back below here on a daily level. You see that, but we did get those daily closes back above the 76.20s, and bam, we took that acceleration all the way back into the 80s. Here, bam, reversal and down. Pretty sweet in terms of short setup. AA setup. For this to be a AAA setup in my book, this daily should have closed back below the 80 mark, but still, you don't want to be too picky on these. That was a very nice little reversal candle, and it's back here. Now, keep an eye what happens this week. We could clearly see a bit more wheeling and dealing, a bit of pressure to the downside, but what I would say is, watch out if we don't get a rate cut. I think most people are still fairly bearish here. So even if we get a bit of a pop on no rate cut or God knows what, most people will be trying to look at that as an opportunity to sell. But I still think a lot of people are also overlooking the carry here if there's no rate cut. So I still would expect this to be globally fairly choppy. And I think the opportunities will probably be at the extremes, not in the middle of the range. I think it could be very tricky at the middle of the range. So I would be interested to engage, around the 80s, around the 70s, whether that's for a range or a breakout play, it doesn't matter. But here in the middle of the range, I think it's likely going to stay very choppy, a bit tricky to read. What's going on cable going into this election risk? So again, fairly pure on cable, a bit more aggressive than we were expecting. I did a video, so if you haven't seen it, you can watch that on YouTube. But basically, we did a video on the Sunday when it closed right here at these lows, right? Everybody was getting very bearish cable, and what we said, again, keep in mind, this is that broader FOMC range, and what we said, as we go into Monday trade, keep an eye on this. This will likely try and break previous day, Friday's lows, and then if it gets traction, then very, very heavy. If it can't get traction, and especially if it closes back above the 146.30, we'd expect this to aggressively try and take a stab at the opposite side of the range, but broadly stay range bound with an upside bid. And we would not be surprised for this to come back and trade mid-range into the election simply because there's so much risk and we're going to have a lot of wheeling and dealing. So what happened, even if you traded this as a daily positive close, pretty beautiful move all the way back up into those 51.60s. It actually pressed much more aggressively than we expected it to actually get traction. We'd expect to see a bit more of a defense at these highs. But anyway, very nice long move. Bam, it pressed higher. You see it actually, what's happening on this, right here we have this previous resistance here defended again and a very sharp sell-off. So again, based on this chart, if we're just looking at this chart, there's no need to do anything drastic. It's still the same chart. So going into the week, it's the opposite discussion we said here, right? 51.60s is the level to watch, right? If we close above 51.60s, we get traction above this, especially in early Monday trade, we could easily see a retest back into these highs and still a bid tone coming in here. But most likely what we expect to happen is to see this hold a fairly heavy tone, and especially if it closes below, if it closes the day on Monday below 5160, see this trying to make a way back more towards this mid-range, which would be right back in the mid-range of the indecision zone through that big FOMC range, heading into the elections, which all in all would seem to be fairly normal, a fairly classical kind of move. Now, unfortunately, markets are not always classical or not always normal, but that's the way we read it to the downside, and that's the way we're going to read the top of the range because we try to be systematic and mechanical in everything we do, okay? And if you look at it on the weekly also, right, bam, all the way back into those highs and fairly aggressive, heavy close on the weekly. Again, here, just letting the chart guide, this was just as much as the long here was very, very nice in terms of, you know, you can't ask for a lot more. Failed break of the range. Friday closes at lows. It takes out all weak shorts, all fortune seekers, closes back positive on the daily to go to the opposite side of the range. It doesn't come more textbook than that, right? And as much as that's true on this daily here, also if you look at our weekly, what was our assumption here on the weekly? Once we break above the 150, the next level is this sell zone to protect those two moving averages, which was the 154.84s into the 155.93s, right? And if you look at it on the daily, again, it doesn't get much purer than this. Bam, hits the first level, gets sold aggressively, tries to take a retest, lower high, two negative closes in a row, bam, and then a roll. So again, fairly technical, fairly nice action here. And last but definitely not least, what's going on Euro? Again, as we said, nothing tends to move in a straight line. Stepping back on the monthly, when we were trading through that 105 on Euro, we said, you know, you can look at this in a lot of different ways, but the more people start to talk about parity, the more we start to get excited for a little bounce or try to look at it in terms of contrarian way. But as always, even filtering out the noise, you know, we're just looking at levels, you know, and if anything, that false break of 105, especially such an aggressive move where it kept on finding new sellers at low, new sellers at low, new sellers at low. Then when it actually pierced into that 105, was fairly clear it couldn't find any more sellers at low at that new level. You see that, you know, you can look at it on any kind of time frame you want, but right on that little pierce, right, 105s, bam, popped out straight away. It came back here, got defended again, you know, started to put in all kind of basing patterns, both in terms of the weekly, but on the monthly, very aggressive move back out. So again, it bounced. We're all in all a decent place for it to bounce, but keep in mind that in terms of the monthly here, right, this could easily even move all the way back up into the 108, and this is still holding extremely bearish, right? So it doesn't mean it's a done deal. It just means it put in a healthy bounce at a zone where we would expect it to be able to do so, right? So in terms of the areas, you know, the first zone was here, which clearly it did not materialize, and after we broke, you know, there's not an awful lot, and it bounced to the next interesting zone. So if we look at it on daily perspective here, again, you know, what we expected, and we kept on talking about that 0730s being pivotal for momentum inside that range at low, you know, we really got traction, and then bam, all the way to the upside. What we said, what we were talking about Twitter, you know, when we start to press, we said, you know, the chart and the levels don't change. On that aggressive break outside that FOMC range, you know, the path of least resistance is likely to try and take out as many stops as it can through that 110.90, through that 111. The level to watch is that 1230s, right? A lot of people start to get excited when it pressed above the 1230s, but as always, these levels, especially when we're looking at it on a daily, are interesting from a daily close perspective, not necessarily what happens throughout the day, right? And if you look at it from a daily close perspective, again, very difficult to get, you know, very decent action. The chart's telling you something, right? We come through that level on the day, bam, we can't close below. You see, this is similar to the opposite chart, but what was happening on cable there, right? We open the next day, instead of taking out weak shorts, we take weak longs, we take out weak shorts, bam, and we close negative again below that 1230, right? So again, for us, it's still all about that 1230 from a daily close perspective. As long as it closes below, heavy back above, then it could get some more legs to the upside, a bit more of a bid tone, right? Globally speaking, I would not be surprised, bar some crazy news out of Greece, something drastic in terms of rates from the Fed, etc., etc. I would not be surprised for Euro to spend quite a bit of time chopping around in this whole broader area, right? Still looking for direction. You know, we've got pretty much those 116.40s to the upside and those 107.30s from the downside. I'm not talking about it as a tradable range in mid because those are just, but I'm just talking about a broader range here. But clearly for now, going into the week, even if you go on something like a daily, you can see that every time we tried to take out those new highs, you know, it's very difficult for it to get traction, for it to attract new buyers at highs, right? Pap, bam, 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 all putting all these negative closes, very tricky. So again, for us, the level to watch here going into the week is going to be that 1230. As long as we can't daily close above that level, I would not be surprised to see this come right back to that other pivotal level. So we're talking about 1090s, you know, on Greek news. I'm not talking about any event risk because then it could really accelerate. However, if it closes back above it keeps on closing below the above the 1230s, then I would expect it to take a serious stab at those highs and try and continue higher into the 13s, 14s, okay? So that's pretty much where we stand going into the week. I think we should have some very decent, some very interesting trades across the board. Keep in mind, we've got an awful lot of event risk, both on the data calendar from the geopolitical side and, you know, from in general from the Greece talks. So again, should be interesting. Stay safe, focus on the levels, let the market come to you. Thanks for listening, and always, I'll see you guys at London Open on Twitter. Have an awesome one. Take care. Bye-bye, guys.